Hey guys, my name is Aubrey and welcome to my channel. Here we discuss all things entrepreneurship, business, things like Upwork, Turo, freelancing, investing, personal finance, and everything in between. If you are not subscribed and you like this sort of content, then hit that subscribe button below and hit that like button. It really helps YouTube algorithm and it helps me to be able to create more content going forward. If you already are subscribed, then I greatly appreciate you and welcome back. So today I want to talk about an interesting topic, and that is investing in the stock market. Now, I've been investing in the stock market since I was 16 years old. I'm 26 now, so it's been about 10 years, and my relationship with the stock market is pretty crazy, and I want to talk about that now, and I want to talk about how I graduated high school with $100,000 in my bank account from investing in the stock market. So let's get started. So I started investing when I was 16 years old. I was a sophomore in high school, and I really did it just for fun. I've been interested in entrepreneurship and investing and making money for really as long as I can remember. And the moment that I turned 16, I wanted to start investing in the stock market just to really learn. I had wanted to start investing much earlier than that, but my dad required me that I had to be working in order to start investing. And so that's what I did. I turned 16, I got a job, and then I started investing in the stock market. And I would say all in all, like, the experience was underwhelming. You know, whenever you're 16, you are just wanting quick money, and that's exactly what I wanted. Like, I wanted to invest into a penny stock and make hundreds of thousands of dollars overnight, and that didn't really pan out. And so I invested in a number of different stocks whenever I was first starting out at 16. One that I specifically know is Lionsgate Film, which is the film company that produced the Hunger Games. And I invested in a few other, like Apple and various other companies like that. I think Microsoft was one that I invested in. And I didn't see a huge return. That was until 2012, my senior year of high school, whenever I decided to invest in the stock with the ticker symbol AAMRQ. Now, if you look up AAMRQ in CNBC or a stock app now, you will not find it. And that's because AAMRQ is no more. American Airlines was the company that used the ticker symbol AAMRQ. And back in 2012, American Airlines stock was at 36 cents. In fact, I'm going to pull up the graph now. It's actually hard to find. You can't really find it anywhere because it no longer exists. So I'm going to pull up just a Google image search to give you an idea of what this graph looked like. So here we have a stock chart of AAMRQ. This is from January 2012 until I think this was like November 2013. So this was like a year period of time. And I invested in American Airlines right around this period of time when it was about 36 cents. And as you can see, the stock went up as high as, I believe it's like $12.25. It went up to that high by the end of 2013. So that is a huge growth in a very short period of time. So I invested into AAMRQ in about January 2012, my senior year of high school, and I invested roughly about $500 at the cost of 36 cents per share. It was technically considered a penny stock back then. And the reason why I invested in it is because I knew American Airlines, I knew the airline really well, and I had traveled on the airline quite a lot, and I was seeing that their flights were full, that they weren't having empty flights, that they were still making full flights, that they still seemed like a busy company. And in my mind, I thought to myself, there is no way that American Airlines is going to go bankrupt. So I invested all of my money into this one stock. And lucky for me, that stock grew significantly over the course of a year and a half. And by my freshman year of college, that next year, I had nearly $100,000 in my bank account. But the thing is that whenever a company goes bankrupt, it's not as easy as it may seem. You see, in the back of my mind, whenever I invested into this stock, I thought to myself, this company isn't going to go bankrupt, they're going to get a bailout, they're going to do X, Y, and Z, and I'll make a ton of money and it'll be fine. But that's actually not what exactly ended up happening, and the process was much more difficult than what I thought it would be. You see, at the end of 2013, American Airlines was bought out by US Airways, and with that, they merged companies. So AAMRQ was now known as AAL. But me being somebody who was completely new to the stock market, I didn't understand how this process worked. I was completely going into this blind. And one day I woke up in November and my entire stock portfolio was completely frozen and it had been brought down to zero. Now you can imagine my panic. I have almost $100,000 in my stock brokerage account, and I look at it one morning and it's at 100, and then I wake up the next morning and it's at zero. And I vividly remember that morning. I was absolutely hysterical. I was so frantic. I was so upset with myself that I didn't sell. I didn't know what was going on. It was absolutely miserable. And I remember I spent that entire day like researching what this meant and what the bankruptcy meant and what the merger meant. And basically here's what it meant, is that American Airlines filed for bankruptcy and US Airways came in and they bailed them out through a merger. So American Airlines and US Airways were going to merge together and they formed AAL. And typically what happens when a company files for bankruptcy is that the shareholders of the bankrupt company will typically have their shares brought down to zero and they'll be worth nothing. But in this case, American Airlines did bring some value to the table, so that isn't exactly what happened. Basically what happened was whenever they merged, American Airlines stocks became frozen, meaning you couldn't sell them, you couldn't buy them, you couldn't do anything with them. And the agreement that US Airways came to with American Airlines shareholders, that they would be giving out almost like blocks of pay or dividends kind of throughout that next year based off of performance. So basically what would happen is that 4 times over the next year, so in 2014, so this happened in 2013, but then 4 times throughout 2014, we would receive our shares back based on performance. So you would receive lump sums of money based off of how many shares you owned. So basically what US Airways did was that they set benchmarkers. And if American Airlines and US Airways, or AAL as it was now known, if they met these benchmarks, you as a previous American Airlines shareholder would be rewarded and you would get your money back. But what that meant was that all of those shares that I had, nearly $100,000 worth, I couldn't do anything with them. I couldn't sell them. I couldn't reinvest them. I couldn't buy anymore. I was stuck with what I currently had, and it was quite literally frozen. So what ended up happening over the next year was that I made that $100,000 back, was that American Airlines and US Airways, and as you can see here from the stock chart over the last, there's 2014, it went up quite a lot in 2014, and then over the next couple of years it went down, and then it went back up, and now it's going back down. So over that year period of time, the stock did really, really well, and as an American Airlines shareholder, I was rewarded for that, and I got my money back. But the thing is, I was incredibly lucky, and I actually didn't know until after the fact that what happened to me in American Airlines was incredibly rare. Whenever a company goes bankrupt, typically the shareholders get nothing. They don't get any sort of dividend payout. They don't get any sort of lump sum payout. They just have their shares go to zero and they walk away empty-handed. And for me to walk away from that experience with $100,000 was incredibly rare and quite honestly incredibly lucky. So I consider this AAMRQ stock to be like a once-in-a-lifetime stock for me. You see those people who invested in like Whole Foods whenever it was just a couple dollars per share, or Tesla when it was down to like $7 a share when they first started out, or any of those companies. You hear these people that got on the ground floor of these huge companies, and now those stocks are worth hundreds of thousands of dollars. And to me, American Airlines was that stock for me. It was that once-in-a-lifetime stock, and I was incredibly lucky to stumble upon it when I did. But I've also learned over the last, I would say 5 to 10 years, that that success is extremely difficult to replicate. I got really lucky. American Airlines was a penny stock, and I was able to sell it whenever it was at $20 a share under the ticker symbol AAL. But that isn't the normal result from penny stocks or stocks at all. Stocks in general are a long-term play. And even today, I have investments in the stock market, but they're stocks that I really think are going to do well over the course of 10 to 20, 30 years. I have a lot of interest in investing in index funds rather than stocks because I think that funds are just safer in general. Whenever you're investing into the stock market, it's important to understand that these types of results are not the standard. They're incredibly rare and they're incredibly hard to come upon. In fact, whenever people hear about the fact that I made $100,000 from a $500 investment, investment. I often get asked my opinion on stocks and how they can do the same thing and what my advice would give, and I never really have advice to give because I think I was just lucky. I think that this AAMRQ example was the perfect example of being at the right place at the right time. I had gotten the right interest into stocks at the exact right moment that allowed me to invest into AAMRQ when I did, which allowed me to then make $100,000. I've done a lot of research on stocks since then, and I am almost 100% confident that I could not replicate those same results today. I don't know enough about stocks. I think that stocks are incredibly difficult. I personally think that day trading or short-changing stocks is the equivalent to gambling. I think it can be incredibly risky. So I wanted to talk about this today because I think it's an interesting topic. I really am interested in the stock market, and I really find it fascinating whenever people can make a lot of money. I think that the stock market is a great way to retain wealth or to grow wealth, but not necessarily to accumulate wealth. But I think that it's an interesting topic to talk about all the different ways that somebody can make money, whether it be by getting lucky in the stock market or Turo or Airbnb or in rental properties. There are so many different ways to make money, and the stock market is no different. The stock market is a great way to grow your wealth, but it's not necessarily a great way to accumulate wealth. And you do find these people that get really lucky and stumble upon the right stock at the right time, like I did with American Airlines, or you see people that did it with Amazon or Whole Foods or Tesla. And those results simply are not the norm. It's not likely for you to turn a $500 investment into a $100,000 profit. And instead, I think that you should look at the stock market as a growth tool, not the means for your growth. And when investing in the stock market, make sure you know what you're doing. Make sure that you read up on the guidelines, that you know what happens if a company goes bankrupt. Because for me, I was 16, 17 years old whenever this happened. And if I lost everything, it wouldn't have been that big of a deal because I was still living with my parents. I didn't have kids to support or a mortgage to pay. I was pretty low risk. But if that same thing was to happen to me today, I would be quite honestly screwed depending on how much money I had invested, because now I'm older, I have a house that I have to pay for, I have bills I need to pay. I'm just not in the same position. And so make sure that whenever you're investing in the stock market that you understand your risk tolerance, you understand like stories like mine are few and far between and they are not the norm, and understand that you shouldn't use the stock market as a means for growth. Instead, use it for a tool to grow your wealth. And that's exactly what I've started doing with the stock market. Is after I did this, after I made my 100K, I actually left the stock market for a really long time because I tried to replicate those results after the fact and I couldn't do it. And I was like, you know what? I've had my time in the stock market. I have been extremely lucky. I'm going to step out while I'm ahead. And I didn't invest anything in stocks for about 5 years. And just recently I started doing it again, but through index funds, because I want to invest in something long term. I want to invest in something safe. I'm not interested in making a quick buck. Instead, I'm just interested in growing my wealth consistently over time. And that is where I think the stock market is a perfect tool. So that is it for this video. Again, I just wanted to talk about this story with me because I do find it interesting, and I think that this $100,000 was really what kind of kickstarted the rest of my life. It was what allowed me to open up a restaurant at 21 years old, which then led me into Turo, which then led me into YouTube. And it was kind of this big domino effect, which started with this one move when I was 16. That is it for this video. If you guys enjoyed this story, then hit that like button and hit that subscribe button. I would greatly appreciate it. And I will see you guys in the next video.